Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on penny stock charts, some of the things to look for when you're trading penny stocks, and during market open, looking for certain areas of support and resistance. How moving average lines and VWAP and overbought and oversold levels, kind of how it all kind of comes together. Again, if you need a lot more help and practice, make sure you head over to our website, take our courses on our website. We have a penny stocks course as well as a day trade room where you can come in and just practice what you learn and what we teach in our videos real time each day. So before I get into some of the things to look for when trading penny stocks, I just want to be upfront and say it takes a while to learn, just like with anything with trading. It takes a lot of practice. You want to have a virtual account. Go in and make hundreds of practice trades before you start trading with real money. Take a few months, get comfortable, because penny stocks, they're very volatile. They're notorious for pumping and dumping, which doesn't mean you shouldn't trade them. It's a very, very profitable strategy, but you have to know how to trade them and how to trade them safely, right? Lots of day traders, they're going out there searching for these low float stocks every day, and they're going in there trying to scalp, your 10, 15, 20 cents, but many times these trades last for a minute or two, and very often, 10, 15, 20 seconds, using things like hotkeys to get in and out of trades really quickly. So, it's a very high-paced environment when trading penny stocks, and that's why you have to feel comfortable doing it first before trading with real money. Again, we teach it live every day. We do live streaming in our day trade room where you could watch us do this, trade penny stocks live, and interact with other traders in our trade room and practice in your virtual account. So again, penny stocks, they're highly volatile. Many of them are pump and dumps again, but it's a very profitable strategy. Float or low float equals high volatility. So the lower the float, the higher the volatility. So the higher the pump, the higher the bigger the dump. So low float is typically anything under 20 million. Under 10 million is very high float. When you start getting nearer to the 50 million range, that's where it's medium float, and anywhere kind of 100 million plus, then it's higher float. So again, still very profitable to trade. We post every night our day trade watch list on our website, and we have a combination of low floaters, medium floaters, and high floaters. So it gives you different types of trading styles. Some people love floaters or low floaters where that go in and out, and they're in and out within a few seconds. Other people like the medium to higher floats because it gives them more time to trade. So again, there's not necessarily a right or a wrong way, with whether you should trade low flow or medium or higher floats. It's all a matter of your trading preference. But what matters at the end of the day is knowing how to trade them, knowing what patterns to look for, having proper risk management strategies in place, and all of that good stuff. I'm going to show you several real world examples in a little bit in this video, but patterns, right? We have a couple candlestick patterns courses on our website. The battle between the bulls and the bears, right? That forms patterns, and these patterns form very important support and resistance levels. Again, not every pattern is 100% foolproof. Patterns do fail, but they are really reliable overall, and they really help to define risk. Now, with penny stock charts, many times, especially with the low floaters, they're not as defined. So it's a little bit tougher to find these patterns, or you have to be quick, right? You might not get several bull flags on a low float stock. You might get one. It might be a little bit weird looking. You have to take it. If you miss that entry, you might not have any other time to get back in that trade, because remember, when these stocks break out, these low floaters, they hit scanners like trade ideas, and that's when other traders start to pick up on it, and that's when the volume really comes in. And then once all that volume comes in, the candlesticks get bigger, and it becomes a little bit more difficult to trade. So these low floaters, you have to be quick. You have to see these patterns quickly and act on them quickly. Now, we can't stress enough how important it is to be prepared each day. Be prepared in the pre-market And at night, we do post again our day trade watch list on our website every night before 9 p.m. Go in there, take a look at our daily watch list for the next day of stocks that are going to be potentially breaking out. And then come in the morning before 9:15 and look on our website. We post trade ideas scanners on our website. Let me show you right now where to go to find these. So right up here under our watch list, we post our day trade watch list here each day, and we do our swing trade watch list several times a week here. And then for trade ideas, you would come right under scanners, and you'll see we post the gappers right here by 9:15 a.m. every day. So it's important to be prepared before the market opens. We do pre-market streams, and again, we stream live each day in the trade room. So you'll see us take our watch list that we post every night, see what's running in the pre-market. We'll map out pre-market highs and lows, the support and resistance levels. We'll pull up trade ideas, see what stocks are running on trade ideas, do the same thing with them. And then we'll have a combination of our watch list and trade idea stocks for market open. We also look for news. Again, especially with these low floaters, they move on news many of times. So that's where, we'll look, using Benzinga or even TD's, news in the morning. You can just click and see really quickly if there's news running on a stock. And that were, anytime you see news on a low float stock, more eyes are on it. That's where a lot of the volume will start to come in pre-market, and that's where other traders are watching them at open. Again, volume very, very important when trading in general, but especially these low float stocks. You want to be able to have liquidity and being able to get in and out of a stock. If the stock doesn't have much volume, it's going to be more difficult to get in and out of it. So I'm going to show you more real-world examples, or show you some real-world examples in a bit. But again, what we do is we map out daily support and resistance levels on the charts, and we map out pre-market highs and lows. Very important to keep an eye on whole and half dollar amounts. Whole and half dollar amounts are very important psychological support and resistance levels, so you definitely want to be aware of them. Also, break of $1. When a penny stock goes and it breaks above $1, many a times that's a huge breakout area. Again, once it breaks that whole dollar amount, you want to see it hold, but many times it'll pump up. It might pump up from, let's say, 90 cents up to $1.30 and come crashing right back down. So again, doesn't mean don't trade them, but be aware of that process. You have to be very quick. When a stock opens, or when the market opens and you have these stocks that you're looking at, these penny stocks in the pre-market, you want to watch for breakouts and holds of the pre-market highs. So when a stock breaks above a pre-market high and it has a good daily chart, and also you would like to ideally see volume confirm the breakout. Many times a stock, you can still trade it and it can be profitable even without a ton of volume on the breakout, but volume on the breakout is something very important to watch for, because many times it'll break out, get volume, and then you'll watch for the pullback to the moving average lines, usually creating, a bull type of flag or an ascending triangle, which gives you better entries where you can purchase near support levels, not at resistance levels. I'll show you again what that looks like. So you want to look for things like bull flags, bull pennants, ascending triangles. Again, there's other patterns like cup and handles and inverse head and shoulders. Again, there's so many different patterns to keep an eye on, but bull flags, pennants, ascending triangles, we like them a little bit better just personally because they're a little bit easier. You can get nearer to support levels. Again, patterns do fail. They fail a lot. But, getting as close to those moving average lines or support levels as possible is very key. Now, again, technical indicators, they're not foolproof. There's a lot of different opinions out there. Some people like to day trade without technical indicators. Some people trade with them. Other people, like certain, indicators over others. But, very popular moving average lines are the 9 and the 20 EMA for day trading, or the 13 EMA by itself. It's kind of like the in between the 9 and the 20. So if you use the 9 and the 20, you don't really need the 13. If you use the 13, you don't really need the 9 and the 20. The other popular indicators for moving average lines are the 50 SMA and the 200 SMA. So EMA stands for exponential moving average. SMA stands for simple moving average. When you also want to look for crossovers, when you're day trading, when you see the 9 crossing the 20 and then price get above it, and then you want to see ideally those moving average lines separate and where price action will stay above those moving average lines. When you start to see them pinch or start to cross the other way, that's the potential of them rolling over. So a 9 crossing above the 20 and price getting above it, that's more of a bullish sign. When it crosses the other way, that's a potential reversal signal. So again, I'll show you what this looks like on charts. Again, also be aware of overbought and oversold levels. RSI, or the relative strength index, is a very popular indicator to keep an eye on. But you could actually you don't even really necessarily need RSI many a times, because you could just look at the chart, and the further away price action gets away from the moving average lines, it's like a rubber band. Naturally, at some point, it's going to want to come back to it. So if the price gets very overextended, it's going to want to pull back, in either direction. That's where the bears will try to push it back down to the moving average lines. Or if it's getting oversold, the bulls might want to come back in, or they're going to try to come back in and push it back up to the moving average lines. And then also VWAP is a very popular indicator. That's kind of like the equilibrium of the stock's price throughout the morning. That's where it's a very popular indicator and support and resistance level. So when price closes above or below VWAP, many traders pay very close attention to that as well. Also, too, keeping aware of like when a stock goes red to green. So when it's the previous close line, if it goes from red on the day to green, that's another very popular support and resistance level where traders might take a trade. So if a stock goes red to green, moving average lines start to cross, then you start to get flags or pennants or ascending triangles near there. Those are all areas to keep an eye on. So again, if you're new and you're like, what the heck is he talking about? We teach all this stuff, again, in our courses and in our trade rooms. It's easier to see this stuff live when it happens. But let me go show you some real world examples of some things to look at. So right now I'm making this video. The market's open. You'll see over here, here's a scan over here. Right up here, I have TD Ameritrade. You'll see shares. This is shares outstanding. It's higher than float, so it's not completely accurate, but it's actually a gauge that's higher than float. So if you see something that's 7 million shares, well, that's under 10 million float. That's super low. 22 million probably means it's under 20 million, so that's still low float. 93 million, maybe it's like 80 or 85 million for the float. That's going to be a higher float. It's going to move a little bit slower. So let's take a look at ESV here. Let's see where that is on. I'm going to put it right over here. So ESV this is a high float stock. So you'll see 170 million shares outstanding. So this is higher float, but it is, so this is where penny stocks, they go anywhere. Some people think of penny stocks under $1. Technically, they go up to $3, but we trade, the small cap sector. So many times people will call stocks under $10 penny stocks, but it's technically under the small cap sector. Again, you got to find your niche. Some people like to trade only stocks under $1. Some people like to trade stocks up to $3. We kind of go up to the $10 range. And we actually build our watch list at night up to $20 to give you even more of a range. So you can actually take our daily watch list that we post and do swing trading with it for some of the ones that are, $10 to $20 to be a little bit safer if you'd like. But regardless of the price and whether it's low float or high float, it doesn't matter. Patterns still are the most important. So whether this is a higher float stock or a lower float stock, you still want to see these types of patterns where a stock goes and it kind of gets some volume in the morning, pops up, give it a few minutes at the market open. Don't trade the first, 3 minutes, 5 minutes or so. You want to let that 5-minute candle form and see what's happening. So what's happening on the 1 minute, you can see what's happening over here on a 5-minute, right? So you can see after that 5-minute, it kind of goes up for a couple minutes, comes back down. So now you have a high right here. So you would obviously mark out your pre-market highs. So this one didn't really have much of anything pre-market, so that's okay. So you can see it's kind of right over in here. There's a couple little lines you can't really see. So stock kind of technically broke out a pre-market high, came back down and retested. And you can see it's holding right here, that blue line. So this blue line is the 9 EMA. My red line is the 20 EMA. The pink is the 50 SMA. And the black is the 200 SMA. Again, these are just colors I like to choose. So now price, you can see there was a crossover in the pre-market. Price is above the moving average lines. They're separated. Price breaks out, comes back down, and it holds that 9 EMA, right? So this is where you could actually technically, if you wanted to, you might risk a breakout of this green candle right here. So right here, you could, that 768 down to 762. That's a 6-cent candle. You could, if you wanted to be a little bit riskier or go a little bit sooner on the trade, you could risk a breakout of this candle, which would have been this one, using a close below this candle as your stop, or a close below the 9 EMA. Again, there's several different strategies. But you can see over here that actually formed kind of a high wave candle. So it is a little bit risky to go off of this because these high wave candles are a little bit trickier to trade. So if you got in sooner here, this worked out, but many of times it might just go the other way, quickly. So you have to be very careful with that. But after that 5-minute candle formed right over here, now when you get a break above it and it holds, this is where it would have been a little bit safer. Now you have kind of a cleaner flag. So a flagpole up, coming back down. And you can see kind of like the spinning topish candle that formed on a 1 minute right above the daily high right here. So now it kind of broke out. So it broke out above this candle, this 5-minute candle. It held. Now you'd want to get your entry nearer towards these moving average lines right here. Now if you risked, again, that 777 down to 773, a smaller candle, and then you could have taken a trade right up here on this green candle here, 777. Then you got to determine when you're going to take profits, right? So this is the whole magic question. You have to know these candlestick patterns, and you also have to know, okay, you're going to get out on a 5-minute chart or a 1-minute chart. That's all a matter of your preference. You have to learn what you are most comfortable with. We always suggest taking profits along the way. Very, very important. So you can see on a breakout here, 777, you can see basically a kind of a little warning star pattern. That's a reversal here. 777 to 789, that's a 12-cent move. Not bad, right? You may have just take that scalp within 2 to 3 minutes, made your 12 cents and got out. If you had 1,000 shares, that's $120. If you had 5,000 shares on that, that would have been, over $500. That's day trading, right? These little scalps, not getting too greedy, right? So this is a 1-minute chart looking at a flag. We are big proponents of teaching our people that follow us and our members to have, when you're day trading or trading in general, you want to see a good daily setup and ideally a good 5-minute setup, and then take your entries on a 1 minute. Many a times, especially with the low floaters, you won't get a 5-minute setup. So right here, this is a higher float stock. So typically on a stock like this, you're probably not going to get a good setup on a low float stock, but on a higher one like this, you get a better chance of it. So this is where, if you look right over here, here's a 5-minute chart. Here is where you could start to see flagpoles up and then here you go, kind of a flag back on a 5-minute chart, right? So you can look down here. That's kind of a flag on a 5-minute chart. It's still a little bit overextended. It's still kind of further away from the moving average lines. But on low floaters, many times you're not going to see or get a setup like this, or especially like this one. This is even better. This is much closer, right? It's getting a little bit nearer to the moving average line. So you'll see I'll just kind of remove this one right here. You can see kind of flag pull up, comes back down. So you will get these at times with low floaters, but many times you might only get one. It's hard to find two and getting them near here. And you got to remember, these candlesticks on a lower floater, they'll be a lot higher of a move. You know, this 796 down to 784, that's still technically only a 12-cent candle. On a lower floater, that could be 30, 40, 50 cents. So you have to be very careful. Now, this is a resistance level. Look how far this price is from the moving average line. See how it goes up and naturally wants to pull back? That's why you want to look for areas nearer to these moving average lines, right? And then, you could risk off this smaller candle, the breakout, and then decide whether you want to use a candle close below this as your stop or a close below the 9 moving average line. But you can see as this thing starts to go, it gets very overextended. This green line here is just a visual of Bollinger Bands. So when I was saying overbought and oversold levels, there's this RSI. When it gets above this red line up here, you'll see it's oversold. So just because it's oversold doesn't mean it's going to fall back, right away and completely reverse. Sometimes you can see it'll go for a little while, but as it goes up, it wants to come back down. As it goes up, it wants to come back down. So if you're a new trader, you want to, again, buy nearer to areas like in here. You'd like to see it a little bit closer in here, ideally, but sometimes you can't get that move. Nearer to like right in an area if you're doing a 1-minute chart, right over in here. Nearer to the moving average lines. You want to see price above these moving average lines. Look for these crossovers like I was saying. So you can see there's a crossover on the 1 minute. Its price is riding up on the 1 minute. It's crossed over on a 5-minute back here, and price is riding above it up here. So what happens is many new traders, what they do, the problem that they do is they're listening to a chat room or a guru or somebody that's out there. They don't know how to trade, and the chat room service, they're kind of pumping the stock up. They're making money. And by the time the new trader gets in, they're buying out here. So they're buying at resistance. They're not buying near support. So kind of the guru gets in, they're probably getting in back here or something. The new trader, they're trying to figure out how to place their order entry. They don't know what they're doing. And then by the time they get in, they're buying out here. And then they're like, what the heck? I just bought out here. The guru made money and I just lost a lot of money. Because they didn't know the patterns right here. Here's a bull flag. Bull flag. They're buying at the top of a flag, not near the base on the pullback. Let's take a look at some other examples. We'll take a look at TTNP. You'll see not really much happening kind of over here. It's kind of a weird looking chart. But you'll see kind of some resistance back over here from the previous day. And price starts to kind of build up right here. This is what I want to show you as well. Is be aware, this is another version of kind of a flag. It's like a smaller, like a little bit of a green candlestick, and it kind of pulls back. So here's nearer to moving average lines. You can see not even much volume, but now it's slowly starting to gain right here. Now, if you waited for a ton of volume, you would have gotten in probably too late. But this is just another thing to look at on other charts. When you start to see, okay, these moving average lines are starting to cross, they're pinching, it's building up here. You may want to decide, okay, I want to get in right nearer to here for the anticipation of a breakout above these areas. Now, it's, again, a little bit riskier because, many times you want to wait for the confirmation to hold, but sometimes you don't get a chance. Sometimes, or many times, if you wait for the retest, this is where you can get a better entry, right? So it's a little riskier to get in anticipation of a breakout. But if you wait many times for the retest to happen, sometimes or a lot of times it doesn't happen, and then it just takes off, and then these candlesticks get bigger, which means you're risking, bigger candlesticks. If you waited for just this one right here, not too bad. $1.60 down to $1.57. So that's 3 cents. That's not bad. You would have had to get in at the break of, as it kind of built up, the moving average lines are crossing, price closed above that 9 EMA. You would have wanted to get in right above this candle. It didn't retest. It just took off. So if you got in above that 160 right here, you would have had 1, 2, now that's 2 minutes. Now it starts to get a little bit crazy up here. But look at this, $1.60. If you started taking your profits anywhere up in these 3 candles, $1.60 up to $1.82 to 96, that's 20 to 30 cents. Oops, I don't know what I just did in my chart there. Let's do this. All right, so that's what happens. And then after it starts to get really overextended, that's where you got to watch for the dump. So it gets really overextended right out here, really overbought, and naturally, boom, it wants to come right back down. Also, no coincidence, look, it's right below a whole dollar amount, $2. So price breaks out, traders want to take their profit. This thing ran for, 3-4 minutes. Remember I said you have to be quick. This actually gave you a little bit more time than normal. I'll show you ones that don't give you much time. But you can see right here, here's that 5-minute candle. What's playing out right over here? Now look at this right here. This is a reversal. This is a warning. But what will happen is a new trader, just think about this, picture it for a moment. If you don't know how to trade, you kind of go to a trade room service. You hear somebody saying, hey, I just got in this TTNP. I got my position. And now, meanwhile, a new trader's like, all right, let me figure out how to set my order entry scheme. I'm kind of confused. Oh, shoot, the order didn't go through. How come it didn't go? What do I do? And then by the time they get in, this is where new traders are buying. They're buying at a top. This is resistance. They didn't buy near support. You want to buy near support, sell at resistance levels. But new traders, they buy at resistance levels, at these peak levels. They're not aware of those $1.50 amounts, psychological support and resistance levels, and then the stock goes and it dumps on. Let's take a look at an ascending triangle. I just showed you a couple flags. Again, there's several different flags to look for. They're not always going to be perfect. Take our courses. We show all the different kind of patterns in our candlesticks courses. But you'll see right here, Roan had kind of an ascending triangle pre-market. So you can see the pre-market highs are mapped out right here. Higher lows are forming. Here's a top. Now the market opens, and you'll see when I zoom in here, kind of went down right at open. Price is above the moving average lines. You had this one close right above pre-market high right here, right? So now it closes. If you wanted to risk off of that, let me just draw the line out right here. 152 down to 147. Not bad. That's a 5-cent candle. If you waited for a retest, you would have missed it right here. So right here, you can see it's kind of at the top here. It's above the moving average lines. If you got in to break above that 1-minute candle, you would have had 1 to maybe 2 minutes to get out. So right here, 152, anywhere up in this area to 166 or so, that's, 12, 14 cents. If you're like, oh, big deal, that's not much. Well, that's day trading. Day trading, you're trying to scalp 10, 15, 20 cents. You're not trying to hit 50 cent and $1 moves. Those happen, but those are more the exception, not the norm. They happen a couple times a month where, you might get a runner that you can stay in for a bit. But most of the time, this is what you see. You get your entry, you take your profits, you get out, and then as you can see, nothing's really happened after that. If you miss that 1-minute candle move, it gets a lot crazier after this. So you have to be very quick. And you'll see, let me take a look at Roan here. Roan, that's actually kind of a higher float stock. So again, even with higher float stocks, sometimes it only breaks out, and that's it. That's your move. Let's take a look at a couple more. Again, I wish I could show everything in one video, but it's impossible to do. It takes just time to learn, right? You got all practice and you got to learn these patterns. That's what we suggest paper trading. So you can see right here, not much was going on with this one. So these are kind of like in the pre-market. Sometimes you'll see these ones where there's not really anything going on these late, but they're still there. And you can see like it's not like a full candle, very light on the volume. There was pre-market highs. Kind of here's at the open, not much happened. Kind of gives you an inverted hammer here. Gets a little bit trickier, but now it kind of goes up, and you can almost imagine this is a little bit of a flag or a diagonal. This is kind of a diagonal looking flag up over here. So if you risked somewhere within here, nearer to the moving average lines, picture again, this is a stock that's broaching $7, that whole dollar amount. So, if you got in at the anticipation of the break of that $7 near here, it's a little bit riskier because you don't know if it's going to hit $7 and just reject and fall. But if you took a risk here, this one obviously worked out. $7 up to $7.59 before. Once you see this pattern right here, this is like a big reversal pattern. So you got to be very careful of that. That's why you got to understand candlesticks. But it's also not too hard to realize because, look, price is super far from these moving average lines. At some point, it's going to want to pull back. If you waited for a retest of the breakout or retest of $7, you didn't get it. So you can almost just picture this as a diagonal kind of flag, just kind of like picture it kind of flying upwards in the wind right here, kind of like this. Let me just do this here. It's kind of like a diagonal flag flying in the wind. These get more difficult to trade because you see they don't pull back. So these are a little bit trickier. It's easier when you get a stock that breaks out and kind of pulls back into the moving average lines near support. But also many times these flags will just trade diagonally up, and then when they start to break up here, that's breaking of the flag. That's a warning sign. And let's take a look at a couple bad ones here. You'll see many of times this happens over and over and over again. You'll look at stocks that are running in the pre-market, and you'll see EDSA. This is a very low float stock, was on everybody's radar. See the pattern in the pre-market, this looks really great, riding the moving average lines. This looks really good. You can see pre-market highs right up here at that 1268. And then look what happens at market open. Kind of will go back over here. Kind of just falls at market open, trades sideways the moving average lines. Nothing really happened. And then you had one quick move up. This one candle went up and it failed pre-market high. The second one tried up again, and this you had to be super quick. I mean, you literally got to be in and out with less than a minute in this candle. This is a big candle, 1089 to 1356. This is where, again, new traders, they would have, the moment this got in above pre-market highs, they would have probably hit their hotkeys to buy it. And meanwhile, the pros, if they were taking this trade, they may have bought down here or down above this candle here, and they may have sold it right in here before it even went to pre-market high. So that the new traders getting caught way out here, and as you can see, it didn't hold pre-market high. So this is, something to be very aware of with these low floaters. You can see this is really nice right up here. Kind of pulls back. It gave you a nice pennant. This is what you want to see during live market hours right here. A pattern like this. That's a nice bull pennant back to the moving average lines. That's what you want to see, during the market open. But you can see what happens at market open after this gray area. Quick little fake out, and then timber, it falls. This again happens like daily. I mean, these happen quite a bit. So that's where you have to be aware with these low floaters, the volatility of these things. Look at these candles, from 1356 down to 1077. Those are very large candles. You'll see these patterns happen with higher floaters. They'll just be smaller candles. But you have to be very quick. So what you obviously want to see are these bull flags, You know, I'd like to see a little bit better of one, but stuff like this, like kind of a bull flag or a bull pennant or the ascending triangle that I showed you before. Let's take a look at one more here, DMAC. Here's another one, pre-market. Here's pre-market highs, 585. Look what happened at opened, at the open. If you didn't get in at this candle right here, it just basically ripped up just above. Look at that. Pre-market high, 583. It went up 10 cents above, came crashing right back down. So, you know, you have maybe gotten in, maybe right here as the price started to kind of moving average line started to cross, maybe you would have looked at another entry, maybe right above the break of this candle, and then take your profits after that, nearer to these moving average lines, not way out here. So again, I wish I could put everything in one video, but you know, trading penny stocks especially takes a lot of time, a lot of practice. We teach you that in our community. Again, head over to our website, bullishbears.com, and take our penny stocks course as well as our other courses. We have so many different ones on options, candlesticks, all that good stuff. And again, we have our trade rooms where we practice live each day. We show you how to trade live. Open a virtual account, come and practice with us, ask questions in our community. We have a very helpful community. So hopefully this video helped you, and we'll see you in our community. Enjoy.